Hey guys, Nicole here with Momentum Accounting. In this video, I'm going to be talking about cash management strategies for S-Corp owners. So if you've ever wondered how much money you can take out in distributions versus how much you should be setting aside for taxes versus how much you should be keeping in the business in reserves, then watch this video because I'm going to give you an easy way to manage this. So as an S-Corp owner, you can take money out of your business in two ways, right? The first one is you pay yourself a salary, and that's usually the same every month. And that's through W-2 wages, same as your employees. And then the second way is through distributions, and usually distributions is discretionary, and it's based on how much cash you have in your business, how profitable you've been, and it can sometimes be a little bit confusing on how much to take out. And so the strategy that I use in my own business is I set a cash reserve goal for myself based on, and I did another video about this on how to choose how much cash to keep on hand in your business. So go watch that one so you can figure out how much is best for your business. So I try to keep 2 months of cash reserves in my bank account at any time. And then so theoretically, if you're profitable, right, your cash balance should go up every month if you're not taking money out. If you're not profitable, then it might be going down, or if you're not collecting your receivables, it might be going down, and that's another issue. But let's say that your cash balance is going up. So what I do is each month, if I have more cash in my bank account than my cash reserve goal, then I take that money out in distributions and do a nice round number so it's easier for your accountant to tell that it's a distribution. So then the second part of this is, okay, so what about taxes, right? Because you also need to make sure that you have enough cash to pay your taxes when your taxes are due. And so the first thing I'll remind you is that you're not taxed on your distributions. So when you transfer money from your business account to your personal account, that's a distribution. You're not taxed when that happens. You're not taxed on the money you take out. You're taxed on your net profit. So for example, let's say you started your business, first year in business, you look at your profit and loss statement, you made $200,000, but you decided you wanted to keep $100,000 in the business and cash reserves. Well, guess what? You get taxed on $200,000, but you only took out $100,000. And so that's why a lot of times when entrepreneurs, their first year in business, get a slap in the face when they get their first tax bill because they weren't planning for it. But what happens is then eventually you start working with a tax accountant, right? And you start getting tax vouchers. So the other part of this equation is when your tax accountant gives you your tax vouchers, there's personal tax vouchers, right? Because if S-Corp is a flow-through entity, you have your personal tax vouchers and you have your business tax vouchers. Those are the corporate taxes that you pay. So this is what I do. I take all of my tax vouchers, quarterly tax vouchers, and I put them into my accounting system. So I use Xero. You might have Xero, QuickBooks Online, or whatever system you're using. So I take the vouchers and I enter every single one of them into my accounting system, into accounts payable. And so for example, for the June tax vouchers, I will date them in June with a due date of June 15th. And then I have everything attached, all the instructions on how to pay it attached to that bill. I make sure I put in the tax voucher number and description so that my tax accountant can see that is the tax payment that I'm making. Because a lot of times people are just making tax payments to the IRS and states, and the tax accountants are like, I have no idea who you're paying this to or what it's for. So it's really nice for your tax accountant to put in the description. And then anything that has your business name on it can be coded to a profit and loss account on your chart of accounts. Anything that is personal is going to be coded to owner's distributions because that's a personal tax payment. So you can either make the tax payment out of your business account directly, but make sure it gets coded to owner's draws, or if your tax accountant is very particular and want you to pay it only out of your personal account for the personal taxes, you would just transfer that exact amount from your business account to your personal account, and then from your personal account, pay the taxes. So the idea here is each month when you're deciding how much to take in distributions, you're always maintaining that ideal cash balance that you've decided. And then if you have taxes due that month, you may not be able to take a distribution that month because you're going to basically use your distribution to pay your taxes, not to live off of. Okay, so that's a really easy way. You're going to make it really easy for your accountant to make sure everything is paid. And then also it's just nice to be able to tell when you're, just check my other video on, making sure that you're always, every week you should be looking at your accounts payable and your accounts receivable, right? So now your accounts, the tax vouchers will pop up in accounts payable a couple weeks before, so you can plan that cash flow wise. See how I did that? Anyway, again, my name's Nicole. I'm the founder of Momentum Accounting. My team works with small businesses typically that do 1 to 10 million in revenue, and we are a fractional accounting department. So everything from bookkeeping, AP, AR, controller services, helping you understand what levers you can pull to increase your cash flow and profitability. If you have any questions, feel free to reach out on our website or book a call with us at momentumaccounting.com, and I'll see you at the next video.